Intuit INTU Beginner's Guide. If you have ever filed your taxes online in the United States, there is a good chance you use software made by the company we are talking about today. And if you know a friend who runs a small business, a coffee shop, a freelance design studio, a plumbing crew, there is also a good chance their bookkeeping runs on it too. That company is Intuit, ticker INTU, and today we are going to walk through what they actually sell, who they compete with, and why their business has grown over the last 5 years. This is an educational walkthrough about the business, not investment advice. So, what does INTU actually do? Intuit sells software, mostly as a subscription, to two big groups, regular consumers and small businesses. The company brings in about $19 billion a year in revenue at very high gross margins of around 80%, meaning for every $1 of software sold, about 80 cents is left after the direct costs of delivering it. That kind of margin is the hallmark of a strong software business. There are 4 reporting segments, but 2 of them carry the story. The biggest is Global Business Solutions at 59% of revenue, about $11 billion. That is the QuickBooks franchise, the accounting software most American small businesses use to track money in, money out, invoices, and payroll. The online version, QuickBooks Online, is now an $8.3 billion product growing 20% a year. The mid-market piece, aimed at slightly larger 50 to 500 employee businesses, is growing 50% quarter over quarter against bigger rivals like SAP and NetSuite, going after what Intuit pegs as a $90 billion TAM, or total addressable market, the size of the prize if they captured every possible customer. The second big segment is consumer, essentially TurboTax, at 26% of revenue, about $4.9 billion. The assisted version, where a real tax expert helps you over chat or video, is now over $2 billion and growing 45%. Rounding out the company, Credit Karma at 12%, a free personal finance app that earns fees when users accept recommended loans or cards, and a small pro-tax segment at 3%. On the customer side, roughly 100 million consumers and small businesses use an Intuit product. So, who does INTU compete with, and how does it win? Now let us talk about Intuit's moat, the competitive advantage that keeps other companies from catching up. Our research desk calls Intuit's moat narrow. Not wide, not none, narrow. That word matters. There is a moat, but it is being tested right now. On the TurboTax side, the moat is getting smaller. For decades, TurboTax has won because the U.S. tax code is genuinely complicated, and most people would rather pay $40 to $100 for software than read IRS publications themselves. But AI changes that. If an AI can read your W-2 and 1099 forms, a 1099 is the tax form for freelance income, and file your return for free, the whole reason you are paying TurboTax starts to wobble. Add the IRS launching its own direct file pilot for some taxpayers, and you can see the threat. The QuickBooks side, though, is much more durable because of switching costs, the time, money, and headaches of leaving one product for another. Once a small business runs its payroll, invoicing, and bookkeeping through QuickBooks, switching means migrating years of transaction history, retraining your accountant, and relinking bank accounts. AI softens that a bit, but Intuit's view is that AI shifts QuickBooks from "you cannot leave" to "it is easier to just stay." The real long-term moat is data and distribution. Intuit owns the financial data of roughly 100 million consumers and over 10 million small businesses, exactly the kind of proprietary fuel an AI personalization engine needs. Plus an ecosystem spanning TurboTax, QuickBooks, Credit Karma, and MailChimp that walks with you through your financial life. What are the key drivers for the business over the past 5 years? So how did Intuit's profit more than double over the last 5 years? 3 forces did the work. First, the migration of small businesses from QuickBooks Desktop, a one-time purchase, to QuickBooks Online, a monthly subscription. Subscriptions generate more revenue per customer over time, and they are stickier. The accounting product grew 22% year over year, and only 5 points of that came from adding new customers. The other 17 came from each existing customer paying more. That metric is called ARPC, average revenue per customer, and it is the single most important growth lever for a subscription business. The second force is the Credit Karma turnaround. When Intuit paid $8.1 billion for Credit Karma in 2020, plenty of people thought they overpaid, and for a couple of years it looked that way. But fiscal 2025 was the comeback. Credit Karma grew 32% to $2.3 billion in revenue, and its operating margin, the percent of every revenue dollar left as profit before taxes and interest, doubled from 19% to 37%. The third force, and the most forward-looking, is artificial intelligence. Intuit calls their approach service as software, the idea that the software does the work an employee would have done, not just the work a calculator would have done. More than 3 million paying customers use Intuit's AI agents, 85% come back, and in January 2026 alone Intuit's accounting AI categorized 237 million transactions automatically. Intuit also has direct partnerships with Anthropic and OpenAI, the two leading AI model companies. To wrap up, Intuit is a software franchise sitting at the center of two everyday workflows in American financial life: filing your taxes and running your small business, with Credit Karma rounding out the consumer side. The big business thing to watch is Intuit's August 2026 platform expansion, which introduces a new product lineup along with consumption-based AI pricing, meaning customers pay based on how much AI work the software does for them, rather than a flat monthly fee. As always, do your own research, and remember, this is an educational walkthrough about the business, not investment advice.